Financial Accounting, Chapter 4, Completing the Accounting Cycle, Part 3 of 3. This narrated PowerPoint is the last before the first exam on Chapters 1, 2, 3, and 4. And this is going to show the full accounting cycle from beginning to end that's been studied in the first 4 chapters. So essentially everything in this PowerPoint is a review. So let's start with the accounting cycle, and it's the process that starts with the very first transaction and ends with a post-closing trial balance. So yeah, this is an overwhelming 10-step process. I don't think that it's anything that anybody needs to worry about memorizing, because I think it's a lot of common sense. There's a couple of tricky parts in here, and so let me see if I can point out the things that sometimes confuse students. Let's see. The fact that the spreadsheet is optional. Let's see. Trial balances here and here aren't required, but in a computerized system they're extremely easy, so that's not a problem. Here's a big one. Step 8. Financial statements are prepared after adjustments, and afterwards we have closing entries. And finally, this final trial balance is not necessarily required, but it does help to provide a full view from beginning to end of the accounts and the account balances, and to ensure that the accounts, the debits and all right, so let's look at this accounting cycle through, I guess we call these figures, through a picture, and we'll go through one by one. I'll show the highlights of each step. Okay, so step 1, we've got these transactions, they're monetary transactions, and they are plugged into the accounting equation, and they're recorded first in the journal. Step 2, these transactions are posted to the ledger. Now again, notice that the rules of debit and credit are listed here, and we're showing T accounts with debits and credits, but that the ledger, as a reminder, the ledger looks completely different on a computerized system. Step 3 is a trial balance that's not yet been adjusted to make. Step 4, adjustment data's analyzed and evaluated. And this truly is the brains and the higher level of thinking. It's the highest billable hours for an accountant who's doing this type of work. And that is understanding how depreciation is recorded, what to do with prepaid expenses, unearned revenue. There's just a lot of adjusting journal entries. And again, that's what we're going to be studying for the rest of this course. Step 5, if an individual chooses to use a spreadsheet. Step 6 would be adjusting entries that are put in the journal and posted to the ledger. Step 7 is making sure that that trial balance is balanced. Next is the big one, and this is actually the end result, which is financial statements. Step 9, closing entries so that we can start a new period, and step 10 is that post-closing trial balance. So let's look at an illustration through a company called Kelly Consulting. And here's a list of the types of things we'll be looking at. And I'll go through relatively quickly. None of this is new. It's all a review. It's in your text. You can take some time to read the narratives there if you'd like. First, chart of accounts. As a reminder, every company has its own chart of accounts, and every company is going to be different. Here we have journal entries. These are transactions recorded in a journal. The first one has to do with common stock. Then you can see they prepaid their rent. They prepaid their insurance. Essentially, if you look at each one of these transactions, even though they don't have explanations in this journal, you can see a history of the transactions for this company for the month of April. Here's page 1, and here's page 2. And they even continue on until we get to the end of the month. Usually the last transaction, particularly in a textbook, is that dividends are paid. Here's our unadjusted trial balance. It shows that our debits and our credits are equal. Here's an optional spreadsheet. As a reminder, we won't be doing these, but in some colleges, they are mandatory within a text, showing the unadjusted and the adjustments and the trial balance, noting that as we go down through this line here, the adjustments are in the middle and they show the difference in the unadjusted and the adjusted trial balance. Here's our adjusting entries. Everything from supplies to expired insurance, depreciation expense, accrued salaries, and so forth. And they do include explanations. Here's an adjusted trial balance showing that the company has their debits and their credits equal. It's also a good time for the financial statement preparers to have a good visual to make sure that all the accounts have been adjusted. From that adjusted trial balance, we can prepare financial statements. And this is really what we're trying to figure out how to do. So this is for 1 month. We show our revenues. They call them fees earned. Those are revenues. We have all of our expenses. And here's our net income. Since an online class won't be doing this by hand, it doesn't matter. But students in a face-to-face class who are doing this in a manual program always ask about expenses and why are they listed in this separate column right here. And that's just to kind of give the users a better visual of the expenses separated, and then the total expenses come down here. Next, net income is brought down here to the statement of retained earnings. I can immediately tell this is a new company because it started with 0 retained earnings. Dividends are subtracted out. And these ending retained earnings are very crucial. Ending retained earnings include dividends, all revenues, and all expenses. And when we turn to the next PowerPoint, we find on the balance sheet, let's zero in there first. Here's our ending retained earnings. We also notice there's assets equal to liabilities plus stockholders' equity. These two are equal. Notice, this is maybe a new presentation for you, the office equipment and the accumulated depreciation, these two are called what we call netted. So net plant, property, and equipment is $14,170. That means after deducting accumulated depreciation. Notice this is a classified balance sheet. We have a classification for current assets and PP&E, as well as current liabilities. And of course, as always, our balance sheets. Okay, after we finish our after we finish our financial statements, it's time to prepare closing entries. And these closing entries are in a journal. So this is the closing entries. Frequently you will see this word up here as a description for closing entries. And there are 4. I hope you remember. R-E-I-D. See, for a review, this always helps. Let's see if I can do this. This is the R. The first thing that we close is revenue. These are the expenses. Notice we close each one individually. This is the income summary that's closed. And these are our dividends that have been closed. And these 4 never change. These are the 4 closing entries in the closing process. It's to zero out revenues, expenses. Here's our post-closing trial balance that shows us that our debits and our credits equal, but it also shows us that we only have permanent accounts open. And the permanent accounts listed here are the balance sheet accounts only. Assets, liabilities, and stockholders' equity. There are no revenue. And finally, Kelly Consulting ledgers. Now these are small, but if you were to blow them up and look at them more closely, you would see, as we've talked about many times, here's a running balance of what's in the ledger. And these are the transactions that occurred with the debits and credits. And each one of these shows the history of that account. As an example, if a manager comes in and wants to know where did this transaction come from, we can go to the post reference number 2, we can find this journal entry on page number 2, and we can find out from this accounts receivable, which has a specific account number, where it came from. We can go back and trace it to the journal for transactions and for our adjusting entries. More ledgers. And let's move on then and talk about the fiscal year, because that closes up the Kelly company. That concludes it, just shows the cycle in a very quick and easy format. So typically accounting is done on an annual basis, a 12-month period. And most of the time you'll see December 31st, which is a calendar year, but oftentimes you'll see a fiscal year. So if you've been following these videos, you recall in a prior chapter, I think it was actually in this chapter, I showed you the classified balance sheet of Walmart. And this was as of January 31st, 2017. So Walmart closes out their accounting records and does a full closing and prepares financial statements because of a natural business year. For them, December 31st, and then they have the month of January to kind of get their inventory together. They have lots of sales, as you know, in lots of retail stores in January, and many, many retail stores close out their business on January 31st. And this is a good depiction of how the history goes for a calendar year. We've got an income statement that's prepared for December 16, and it's for this time period. And then we end up with a balance sheet as of a specific date. What are my assets, liabilities, and stockholders' equity as of 2016, the end of the year? And then we'll show income for a year, and here's the year 2017, and then we'll show the balance sheet. And then we'll show the income for a year, and then we'll show a balance sheet. So this shows us how the financial history of a business runs full cycle. So this concludes the first 4 chapters of the accounting process. As I've said many times before, this is bookkeeping. This is what many students will learn if they were to take a bookkeeping or an intro accounting class, maybe at a technical school or a community college. Sometimes community colleges will separate, or tech schools will separate their accounting into this part, and then the second part will be more details about how to use and understand and prepare adjusting journal entries, how to use the financial statements and interpret the financial statements. So this is a full, involved process related to bookkeeping and beyond, and it sets an extremely strong foundation for future studies in accounting. Those of you interested in accounting, I always have to make this statement. What we've studied in these first 4 chapters is your foundation, but it's doubtful that you will ever be preparing these types of detailed records. Instead, you're going to be using records that have already been prepared, whether it's advanced journal entries, whether it's auditing the numbers on these accounts, whether it's setting up controls so that individuals can't misreport or steal from a company to ensure that there's integrity of the financial statements, or it could be using this information for tax data. Sometimes it's used in the mergers and acquisitions part with investment banking, and that is in understanding the financial the financial undertakings of a business, and that's what the M&A business is, the mergers and acquisitions of investment banking. That's what they do. They analyze these companies, understanding the details about the financials of the company. So